capital is not a simple solution. Something I learned at MIT, the 3 laws of thermodynamics. You can't win. You can't break even. But you can't get out of the game. So you could stop right here and be a little bit depressed. But then again, we don't want to lose. So you start thinking, what if we could find a way out of the game? Then we could break even. Then you could win. Satoshi found a way. He gave it away. And he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Michael Saylor presents a paradigm-shifting view of Bitcoin as the solution to our economic dilemmas. In this talk, he breaks down the limitations of traditional financial and physical assets, contrasting them with the revolutionary potential of Bitcoin as a 100,000-year asset. Learn why Saylor believes Bitcoin is the key to preserving and growing wealth in an increasingly digital world.
And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long-duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg. You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes, income tax, capital gains tax. Every time you vibrate and move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics, catastrophe. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts through the Lancasters and the Yorks and eventually found its way to the Hanover family. And so maybe 7 different families split that. None of them got to take it with them. So physical assets you might think might last 1,000 years. Probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it.
MicroStrategy founder Michael Saylor kicked off a busy afternoon of keynote panels and speakers with a presentation that proved to be an investment pitch for Bitcoin from individuals all the way to nation-states. Saylor provided a host of interesting data points to back up a prediction that Bitcoin's characteristics as digital capital could see BTC surpass $13 million per coin by 2045 as adoption grows. Bitcoin is $13 million a coin in 2045. It could be a $3 million bear case. It could be a $49 million in a bull case. Also, presidential candidate Robert Kennedy Jr. wrapped up day 2 of Bitcoin 2024 with some bold promises should he become the next leader of the U.S. RFK Jr. vowed to transfer some 200,000 BTC, currently held by the U.S. government, to be transferred as a strategic reserve asset to the U.S. Treasury. Kennedy said he would also sign other executive orders, including directing the U.S. Treasury to purchase 550 BTC daily until the U.S. has built a reserve of at least 4 million Bitcoin. This would be a position of dominance that no other country can usurp. Our nation holds approximately 19% of global gold reserves. This policy will give us about the same proportion of total Bitcoin. Kennedy said the cascading impact would give Bitcoin a valuation of hundreds of trillions of dollars. Edward Snowden delivered a sobering address virtually on the Nakamoto main stage in Nashville, highlighting the political undertones that have dominated the underlying agenda of the conference. Snowden said politicians were trying to earn the love of Bitcoiners to pursue their own interests. They are not our tribe. They are not your personality. They have their own interests, their own values, their own things they're chasing. Try to get what you need from them, but don't give yourself to them, even if you have to vote for them.
Satoshi found a way. He gave it away. And he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created. Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is the solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch, and so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas or owning the bar of gold or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics.
The Bitcoin advocate said that 2024 will go down as year one of mainstream institutional adoption of Bitcoin. Saylor's business intelligence firm owns over 200,000 Bitcoin since it announced Bitcoin as its primary treasury reserve asset in August 2020. Saylor said he continues to receive calls from the CEOs of public companies and institutions interested in the Bitcoin-first investment approach, which Saylor has in part pioneered. Meanwhile, Saylor intimated that the presence of 2 United States presidential candidates and other prominent senators could be a positive boon for Bitcoin. I think there's a fair wind blowing for Bitcoin regardless. I really can't see any administration in the future not embracing Bitcoin. Saylor added that it's not a question of future governments being pro-Bitcoin, but how aggressively they'll move, and whether they move with alacrity or whether they move a bit more deliberately. The MicroStrategy CEO said the industry had passed an inflection point in January 2024 when it became clear that Bitcoin had become an institutional-grade digital asset. As Larry Fink has said, it has a place in every portfolio. It's got enormous global appeal. It's something that is unique, and the world needs more of it, Saylor added. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.